afternoon. This is Chris Brecher with the Simpler Stocks free video for Wednesday, November 4th, 2015. It's about an hour and 19 minutes before the close. Wanted to get this out early. There are a lot of earnings coming out right on the close, so I was probably going to trade those. Wanted to get this done because there are a lot of interesting correlations that are going on in the market, and this is something that's going to happen even whether I put it on now or in an hour. It's basically the biggest thing going on in the market right now is the euro and the sell-off in the euro. Now, with every currency, the way I look at it, it's not where it goes, it's how fast it does it. As you see, when you get a move like this, that basically 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, the euro's gone from over 112 to the dollar to 108. That's pretty dramatic. Now, on the trade of the week, on the simpler options side, John Carter had done a trade shorting FXE, which is the Euro ETF. If you see a weekly chart, you'll see why. So look at the squeeze on here forming in the Euro. Look at this wedge here, and if it breaks here decisively, it could go way down. Let's look at a month. I'm not even sure I can put a monthly chart, but I'll try. Put 10 years, 1 month. And you're going to see the significance now of this level right here. Now, the reason I'm showing this is this means there's a strong dollar. So when I had originally done the trade of the week, basically John Carter did a trade and then the other traders give their take on it. I didn't want to do the exact trade, so I'm like, well, what does the dollar, if the euro goes down or dollar goes up, what correlates well with the dollar going up? And that's gold going down. So if you see on the left, you see the euro on a daily, and I'm going to put the FXE. It's just easier to see because that's the actual product he messed around with. You put the FXE on the left, and now you put gold on the right. And you'll see the correlation that not all the time, but right now it's working. And remember, one of my mottos is it works until it doesn't. Look at this correlation here and how you see the FXE break down right here, and now you see gold breaking down. So what happened was with the violent nature of this sell-off has brought gold down. It's even yesterday, and now what's happening today is you're seeing the material stocks going down because of this. You're also getting today that like Time Warner is down because of bad earnings, and I'll go into that in a minute. But what you're getting is you're getting the USO or oil going down finally. Yesterday it had a massive rally. Today finally the strong dollar has affected it. I was fascinated that it didn't affect it yesterday while it affected gold. In fact, here's another relationship I wanted to show you. So now you have the strong dollar and it going up abruptly affected gold, and I'll show you on a 15-minute dramatically. I mean, this is a big move in gold. You're talking about $35. Oil went up yesterday, finally started to affect oil. So what you're getting is oil selling off, gold selling off. What else is going to sell off on this? Usually materials. Now, there was bearish news on U.S. steel anyway from China subsidizing their own steel companies. But let me just show you U.S. steel. So it had a double whammy in here. You'll see U.S. steel, if I can get it up here, had a nice move down. As you see, it was up to almost 13 in here. Started selling off yesterday because of this thing with steel, with China subsidizing steel, and then just got bashed this morning on weak earnings. So now you have U.S. steel, you have gold stocks, you have Exxon is going to go down because of oil going down. So what happens is Exxon starts to go down because of oil. The gold stocks go down because of gold. Now, and so you see sort of the domino effect in here. What doesn't get affected by this is the tech stocks. So what are you getting today? Look at Amazon. I'm going to put I'm going to put actually Google on the left and Amazon on the right. These stocks are almost at all-time highs. Today, Google is up $6. Amazon is up 17. Now, there's another reason Amazon's up. Big worry for Amazon this year has been a company, Jet, was coming out that was going to be like a Costco of the online retailing. and there was a big worry that Jet would take a lot of Amazon shares. Jet just had to do an extra $550 million of financing to not run out of money by the end of the year. And I think that decimation of Jet and the worry of that's gone out of Amazon stock now, and the stock has popped because of that. Now, another thing we've mentioned with Amazon is after earnings, it had a measuring gap anyway. If you look, the measuring gap last time didn't work back here in August. This time we're talking about a move from 500 to 560, 60 points, and you measure a gap by the previous move, and then you add that 60 to the low right on earnings day, which was 596. 60 points gets you to 655. Well, it's already 645, close, pretty close. But that's one reason that you've seen that stock up. But you have the Amazons, the Googles, you have Priceline, you have a lot of things that are acting pretty well in a bad market. In fact, if you look on here, the ESs are hardly down. They're down all of 5 points. And if you look on the right, the NASDAQ is actually up because of the Facebooks and the Tesla and the Amazons. So that's what I'm watching in here. For tomorrow, what I'm watching, you have the unemployment report looming on Friday. Now, if the employment report is stronger than expected, the dollar is going to keep going up. It's going to look like the Fed's going to finally raise in December, and you're probably going to see the same thing. Gold sell off, the dollar rally, crude oil sell off. You probably get the stocks finally to sell off a bit. Now, right now, what I think is tomorrow is going to be more of a holding pattern, so I'm going to be playing earnings-related stocks. The big ones tonight are Facebook and Qualcomm are the two biggies I'm watching. For tomorrow, I'm going to be watching, this is tomorrow afternoon, I'm going to definitely be watching Disney. Another one to watch tomorrow morning is going to be Gilead, I believe is coming out with earnings first thing in the morning. Let me, always on Thinkorswim, put it in like this. Not Gilead, Celgene, I'm sorry. And you'll see their earnings are coming out right here before the market tomorrow. So I'm watching Celgene, I'm watching Disney, I'm watching Qualcomm, and tonight I'm watching Facebook. On the premium edition, we're going to go into actual option activity in this. Yesterday, I got to tell you, I nailed it with 15 minutes to go. We were talking about Tesla and that the calls in Tesla, the stock was on its low for the day. It was 208.50, and the 40 calls in Tesla had doubled from where they were a half hour earlier. 30 calls had tripled. And I said, and I actually posted the video on the Simpler Stocks Premium site 15 minutes before the close, saying I'm posting this video early so you'll see this unusual option activity. When you see the puts start to collapse, the calls surge, and the stock on its low, the chances are the stock's going to rally on its earnings report. And as you see, Tesla was up 22. So we're going to talk about some more earnings plays today and on the premium edition, and I hope you can join us. We have a 30-day trial for $7. It's a great deal. We've gotten huge amount of feedback, almost 400 people taking me up on that offer. So take care, and I will talk to you tomorrow.